What's good, YouTube? Hope everybody's having a great day. As I always say, it's a great day for AMC for sure. The inevitable bounce is how I like to call it. You can definitely see why I call it that. Today we had a 20% day. Very, very big for sure. Now, this is my chart. I'm going to be showing how this is actually a cycle, a repeating pattern. Credit where credit is due, because there's a lot of people who have been talking about this, and I will put them as well on this video. Credit where credit is due. I'm going to be talking about my chart first and Elliott wave theory, and you can definitely see we're at the fifth wave for sure, without a doubt. The first part of this upward trend impulsive wave pattern was taking place when we went from $1.91 back in January all the way up to over $20. And this is when the first wave happened. Then the corrective wave of wave number 2 was when we went down to even lower than $5, but finished this wave 2 at around $8, because then we had a reversal to the third wave, which is another impulsive wave of over $70. I remember that I was here for everything since January. You can check out my videos. This then started to actually have the upward trend around May, end of May, beginning of June, and we had this third wave. After that, we had a corrective wave of wave number 4, and you can see how this did respect the trend line I drawed over here since the move from the $8 range over here. It's been respecting this trend line, and as soon as it touched it, it bounced from it for a breakout and a retest over here at this $33 range. Now we've been respecting the trend line yet again and going to this upper range of over the 40s, 48 at the peak. But now we are around $44, continuing the upper move of what I feel like is actually going to be over $100 for sure. If you hear the fan of my laptop, there's not much I can do about that, but I'm going to try to remove it as much as possible. There's really not much I can do about that given the power my laptop needs to be recording and doing all of this. So now I'm going to show you, I have been working on something that I basically feel like it's an essay at this point. I have so many pages of it in terms of the global dollar problem, the deflationary warnings in the market, and the collateral issue. And this is something that I really am interested in. A lot of people have been talking about the collateral shortage and the collateral strain in the market, how they really need it, and they're not finding the best one, the pristine collateral in the private market, repo market. So they have to go to the central bank, the Fed, which is at over $1 trillion. But I go very in depth into this, and a lot of people have as well. So credit to those that have already posted it. But I will be doing a video myself, and there's some things that I think other people haven't talked about that I talk about right here. But that will be for another video. I did show you where we're at currently, so it's the inevitable bounce is right there for sure. But you could actually see this with some of the charts, and I'm going to show you that because we also see this guy right here. That guy Astro is definitely the one that has been talking about the repeated pattern and how it actually plays in fractals in smaller time frames in the chart. And you can see it in the bigger time frames. If you want a clearer look at what I'm talking about, you could actually check this chart right here. This guy right here, credit where credit is due, the White Rabbit, this is his Twitter. He actually did this very clean chart where he shows how these fractal patterns keep repeating like it's a cycle. And you could actually see that this cycle over here from where we were at May, I'm going to try to zoom right here. This cycle right here has been repeating over here, and the fractals, the patterns, he's actually highlighting them in rectangles so you can see what part we're at. And this is actually the purple part is what happened in January as well, and in other parts of this actual cycle. So this has been something that is not just Elliott wave theory. You could actually calculate this with Elliott wave theory, but it's been happening in a hyper timeline at a faster pace, because when you have a stock that is being held multiple times over its float, and it's actually been shorted multiple times over its float, but the apes are constantly holding and buying these synthetic shares. The algorithm is actually trying to meet this supplemental liquidity providing pattern of actually being a market maker and trying to switch from long to short and trying to actually benefit from these cycles themselves Well, they're actually creating this algorithmic pattern that follows very, very tightly a range in which they could actually try to protect themselves and manage the risk that they're trying to constantly mitigate and not make this blow up into the massive squeeze. So it's constantly following this pattern, right? And you can see it very obviously here, because this Elliott wave theory pattern would have actually taken a much longer time with organic trading. But that's not the case when you hold the stock multiple times over its flow like apes have. Then this actually takes place in a compressed fashion. As you can see right here, we've been having this compressed chart that is literally mimicking what's been happening on previous cycle, but at a faster pace, because this actually takes place at a faster pace given the volume increasing. So even the downtrend right here that we saw was in a similar way than we had in January, but the fact that we had more volume compressed this. And basically when you compress something, you like literally compress it, so you can see this pattern taking a compression phase, in which then this happened in less than 4 months. This took from January to May, January, February, March, and April, May, 5 months. This has been from June, July, and August, 3 months, and it will happen through September as well. So this has taken much less time. The acceleration of the volume has helped the compression make the chart go through these patterns at a faster pace. We respected the trend line right here as well, the way he drew it in the triangle, the same way I did with my chart, if you want to look over here. And once we actually broke this triangle that he's putting into what is basically a bull flag, if you want to look at it this way. So once we broke it, guess what happens? We started ripping. And this is what's going to continuously happen, because this is the start of, guess what? This is the start of this right here. And if you see, this spike right here is it has a resemblance of this spike right here, which I'm moving with my cursor. But guess what? This spike right here is at an upper part at the 48 range compared to where this was right here, which was actually at the 36 range. So definitely we're going higher. We're going to have new all-time highs, and the pattern is taking place once again. This is basically around what we're seeing at this part right here, a bit more compressed, as you can see. Then we're going to actually have the spike. We had it right here basically at a higher range at 48 compared to 36. How I told you, you can see the price actually right here at this area. So we're going to have this type of spike, and you're going to see what I feel like will be a very big parabolic move over $100. So credit where credit is due to Sam, that guy Astro. He has great due diligence in terms of how he actually finds all of this. He's even saying this is bigger than the actual cycle now. He's found something else. So he's very good at what he does. Credit, he definitely deserves it. Credit to the patterns that this guy actually gave us, the white rabbit. I'm showing this chart aside from my chart and how I calculated with Elliott wave theory. I will be explaining this in another video because it's so much information, right? But I wanted to show something else at this point in time, because very interesting article, which I will do in another video, says what drives the price convergence between credit default swaps and put options, new evidence. And this is actually from somebody that was from the University of Manchester, and it includes these writers. So they're from the University of Manchester talking about this, and they talk about how deep out of the money put options, which is something you see on the AMC options chain. So this is actually taking place right now. Deep out of the money put options can be used as credit protection instrument, and this is happening with. You could do this with credit default swaps, which is a type of instrument, but you do this as well with deep out of the money put options. Guess what has deep out of the money put options? AMC. Now take a look at the put options for AMC. They have out of the money put options at a 50-cent strike, at a 50-cent strike, at a $1 strike, at a $1.50 strike, at $2 and $2.50 strike. You want to see the open interest for this? 23,000 over 9,000, 2,000 over 11,000 over 9,000, once again over 14,000 over 5,000. They have over 22,000 for the $5 strike. So this is way deep out of the money. Just like this article right here says on the abstract, this is over 100 pages, by the way, and it shows that they can use deep out of the money put options, which is exactly what I'm showing you right here, deep out of the money put options, to try to use that as a credit protection instrument. So they use this to try to mitigate the risk and try to actually protect themselves if they're very extended on margin for these derivatives and the way they're doing their swaps. Because this is what they do. They do these total return swaps, which is basically a basket that has these stocks like AMC, GME, BlackBerry. And what do they actually do with this? They end up putting them in a basket, which is a swap, and they use this to short it indirectly and not have to short it specifically through the actual security, AMC or actual GME. So they put all of these stocks in a basket and they short that basket. But what happens? They have to actually mitigate the risk of that short position by actually having a futures, which is another type of derivative, and they use these actual futures to mitigate if the price of these securities in the basket go up. And this actually creates a gamma event, which is in another article I wish I had put up right here, and I'm going to take some time and looking for it, so I already have it in memory because I read it. This actually produces a gamma event, aka a gamma squeeze, given the fact that they have to roll over these futures to hedge and mitigate the risk of the short positions they have in swaps actually going up in price. So every time, since they're in the negative and they have unrealized losses and they're losing on these short positions, they have to roll over their futures to protect themselves basically and have this as a hedge. But this creates a gamma event, and this is why these future rollover periods, if you take a look at them and you look at the actual dates for these future rollover periods, they actually coincide very, very closely with how the price action of stocks like AMC, of stocks like GME actually end up moving. Guess what? March 19 was the expiration date. February 23 to March 11, they have this rollover period of that March 19th expiration date. And this rollover period actually allows them to continue having these futures be rolled over to maintain these positions for the swaps as well. So what happens? We had this also for the June 18th expiration of these rollover periods, which was around May 25 to June 10. Guess what happened around May 25 to June 10? That's right, ladies and gentlemen. These stocks actually all went up. AMC went up to 77 around May 25 to June 2, which it went to 77. The same thing happened to GME. It went back up over those $300 ranges. And the same thing happened to BlackBerry. It went up in cost as well. So around these future rollover periods, it creates this gamma event. Guess what's happening right now? August 24, we're starting to see the uptrend because from August 26th to September 9th is the next rollover period, as you can see right here for this. And guess what's actually happened to the price right now? That's right. We're around getting to that August 26th period where some rollovers occur, not all of them. And this is actually going to create that gamma event once again. So they're stuck in this cycle given the hedge with the futures to hedge and protect the actual swaps, which is the way they're shorting these stocks in the basket of what I call the basket of meme stocks and how they used to short them because they thought they were not going to succeed. But they didn't realize apes were going to keep holding. So this is definitely amazing to look at. And credit to Creon, I think that's how you say it, where he's actually talking about how this actually takes place. Here's his username on Reddit, so credit to him, full credit. That's going to be it for this video. This is very long already, but I just wanted to share this. Hopefully you could actually hear me, and that's going to be it. Take care. AMC to the moon, GME to the moon, BlackBerry to the moon. Peace.